I want to turn the attention to the first panel. I'd asked the first panelist to come on stage, and I'm pleased to introduce you to your moderator, who's going to be introducing the rest of them. So Rob Heller.
Thank you.
Please join us, and enjoy the day, everyone. Thank you for being here.
Thank you, Robert. My name is Robert Heller from Spectrum Gaming Capital. We are investment bankers and advisors, financial advisors in the gaming industry. And we have a great panel with us. Unfortunately, Adam Rosenberg, who is still trying to get here, but won't be here in time for the panel. But we do have a great panel. In the center, we have Stefan Nelson, the CFO of LeoVegas. A very interesting perspective he'll be able to bring to us because, as you probably know, MGM purchased LeoVegas, and that was a very, very big transaction in terms of innovation in the U.S. because it was cross-border. A fully land-based company who at one point was going to be buying Entain and has a very successful joint venture with them, decided to go directly into the business in Europe. And so we'll learn more about that and how that affects the financing of this business and valuations in this business. Next to him is John Pettemerides, who starts with a background in gaming operations, but is now an advisor and an investor in the process of capital raising for an investment fund to help early-stage gaming companies and join the other venture capital firms that are well known in this space, recognizing the great opportunity. And to my left here is Peter Stevens, who is a portfolio manager at Waterhouse VC, which I think is maybe the longest-running VC involved in the gaming space. Waterhouse VC, is that right?
I think so.
Looking at your advertisement, it's like 20 years with some insane levels of returns. So these guys clearly know what they're doing in terms of making investments, and hopefully they'll be able to shed some real good insight into what we're going to be talking about today. So just to set the stage of this panel, which is entitled, Can the Economic Crisis Yield Unique Opportunities? One of the first things that I saw when I saw this title and started to think about how we should organize this panel was, what economic crisis? I remember the last few economic crises, but a crisis, I guess, is a definition of the word crisis is a time of intense difficulty, trouble, or danger. And I guess it depends on who you are and what your situation is if you happen to see this way. So I think what was thought about by the organizers of the conference originally was, the fall in valuations of gaming companies, especially in the U.S. So I wanted to put up a couple of slides. And what this looks at over here is the blue line is the NASDAQ, which the index of gaming of technology companies that includes gaming. It's not dominated, obviously, by gaming. It's a tiny piece of it. But, there's this technology world that gaming technology is part of. And we see, and I took it all the way back to about the time that I started in the business, because I've seen a lot of these cycles. And if you recall, there was the dot-com boom of the late 80s and early 90s. And you may remember the concept of irrational exuberance, why these companies that made no money had these ridiculous values. And we saw a 350% increase until the bust happened, and then the big decline. And you know how numbers work. Obviously, the 75% decline is equivalent to 350% increase. It depends what base you're looking at. But it took 15 years for it to come back to where it was in the prior peak. That's a really, really long time. And we had the big Great Recession of 2008, and you can see there was just a little bit of a dip there. And then this steady rise over the last 12 years. And that was a 225% increase. So again, a dramatic incline, and then in late last year, we saw another bust in technology, and gaming, of course, gaming technology companies all followed the same pattern, and we had this 35% decline. But look how much it's recovered, and it's recovered a little bit more since we made this slide a week ago. So, looking at it from a historical perspective, it may be a crisis for gaming technology, but it's certainly not a crisis for the investment community. And then what we wanted to look at here further is, so how is the gaming sector doing? If you go onto our website, spectrumgamingcapital.com, you see analytics. We track every gaming company, almost every public gaming company in the world. So we can create all these indexes, and you can see it if you just go onto the website and click on analytics. But this is looking at it for the last 2 years. The red line is the international gaming technology companies, B2B and B2C. And you can see over the last 2 years, they've done relatively well. They've done reasonably well and relatively well compared to the rest of the market. The NASDAQ is about flat over the last 2 years. But the blue line on the bottom is the US. So over the US, which had the big run-up, and everyone was so excited about gaming technology in the US, well, if you invested in those companies 2 years ago, you're not doing that well. You missed the boat. So we wanted to dig in a little bit deeper. Sorry for the complicated slide here, but what we did here was we broke up into B2B and B2C. And look at the bottom, the red line that stands out from the crowd, 45% down over the last 2 years. That's B2C in North America. Now, this is an index, so it's heavily weighted towards certain companies, and DraftKings brings that down a lot, and Tane offsets it a bit, but you could see how poorly it's performed. At the very top, the best performing group, which has had no improvement over the last 2 years, is the B2C internationals. So the Flutters of the world and Entain whatnot. So that's just a little bit of a backdrop for what we're going to be talking about here. Let me see. Oh, there we go. Okay. So I'm going to ask our panel to provide some commentary on this as a way to start off. So the first question really is this just a bump in the road, or is there something that's happened that's fundamentally changed in this business? Why don't we start off with you as a key investor in the space?
Yeah, sure. But I guess as you pointed out, there's been a strong recovery, and I guess we've seen the online gaming index rally about 40% since the 1st of January, and compared to the NASDAQ, which has rallied 25%. So it's actually bounced a lot more. And as you said, there are a handful of companies that have really driven both the previous decline and also the current rally. And I think that the M&A activity in the industry demonstrates that there isn't really a crisis. And I think we've seen that through a couple of recent transactions, like the Fanatics and PointsBet deal, which was then subsequently outbid by DraftKings. Of course, PointsBet still is loss-making, so you still see acquirers that are happy to take on acquisitions of loss-leading businesses. And I guess another one would be the Aristocrat NeoGames transaction, which was at 15 times earnings. So I think that whilst there's definitely a crisis for companies that are loss-making for the most part. If you're trying to raise money, that money is now 5% more expensive than it was before when rates were zero. So I think that it's probably a tale of two halves, where the businesses that are cash generative are doing pretty well, and I think that's also shown in the graph that you showed before, where you have B2C international. Hasn't been a great investment, but it's been a flat investment, which is much better than a 30% decline. But I think that the deal flow shows that it's generally not a crisis. In a crisis, you would normally see everything stop and everything being negotiated down. I think the only major deal that was negotiated down was the recent Endeavour acquisition. So.
Well, you make a good point, and I think the shift that happened last October was the market woke up and said, you know what, we're tired of waiting for these smaller companies to go from revenue producing to EBITDA producing. We want to see cash flow. The big companies all have that already, and so there's been a focus to those companies. DraftKings clearly wasn't making money, so it saw its valuation drop dramatically. But I would imagine most of the people here in the room or at this conference are more focused on the VC earlier stage business. And so I'd like to turn it over to Jonathan for a moment and comment on that in the context of this shift from investor focus on revenue production to EBITDA production. How does the outlook look as you're talking to investors? Are they willing to consider these smaller companies and the revenue producing, the ones that are already producing revenues, or even ones that aren't producing revenues?
Yeah, I think that the landscape's shifting all the time. So I'd agree with Peter that we're certainly not in a crisis yet, but difficult to raise capital if you haven't got runs on the board and you can't demonstrate revenue, cusp of profitability, at least. And I think some of the earlier stage entrepreneurs will struggle because most venture capital businesses are being more selective with where they put their money. But that said, capital is still out there for the right deals. And I think it's really up to the entrepreneurs to manage their balance sheets, to probably preserve a little bit of cash, give themselves a bit more runway than they would have done a year or two ago. And the strong ones will survive. But I would expect a number of businesses to hit the wall in the next year and not find capital as easily as they did 24 months ago.
You know, you raise a very good point, which is the idea that these businesses are going to hit the wall, which in this case generally means they're running out of money to fund their losses. And those losses are there for growth. The question is, what happens to these companies? Do they get consolidated into other companies, or do they just get thrown away because it's just not that important? Particularly when we think about sports betting in the US, there are just too many B2Cs competing for the same customers and just blowing their brains out, spending money to get them in. So, you know, as investment bankers, we always want to do our job, which part of our job is to try and merge these companies. And the question is, why would I want to buy their customers? They're the same customers I have already. Let them just go out of business. What's your reaction over at Leo was a company that came in late, a little bit later into the business, but came in with better technology and better procedures and was able to move up quickly. And MGM saw this and said this was compelling. But most of us think that you guys are going to continue, meaning MGM and its peers, are going to continue to make these acquisitions. So how does it work when you look at it? I mean, I would imagine you're helping them with that. Now, when you look at the landscape, is there something really out there, or would you rather than wait for them all to die and just pick up their customers?
Yeah, we're waiting for them all to die. Yeah, that's perfect. No, but I think that this situation that you're describing creates opportunities for us, right? With MGM as owners, we're well funded and can. I don't think I haven't seen the valuation multiples go down that much for bigger assets, which we're primarily looking at, but I think that it will eventually, because there are not that much buyers out there, and cost of capital is more expensive. So, sure, there's more opportunities, but for us, we need to we're not kind of trying to find distressed assets. We're looking at what makes a difference for us, right? Can we consolidate the existing market? Can we find access to a new market with a strong position, or can we find proprietary technology that makes a strategic difference for us? I mean, the first acquisition we did was Push Gaming, which we announced a few weeks ago. That's kind of a very different type of acquisition than the startups we're discussing, a very well-established premium provider of content that will make a difference for us as a group, both Leo Vegas and MGM. So We have our ventures arm where we've both we sold our shares in Beyond Play this year. We also made a small investment in a software company called Humbles. We do some startup investments, but then it has to have some sort of strategic rationale for us to where we see synergies with the rest of the group. Otherwise, it's uninteresting for us.
And so you're not just investing money then, you're making strategic investments, but these companies have to somehow ultimately fit into the bigger picture.
Yeah, the only reason we would do a kind of startup phase investment is that we see synergies with the group as a whole in some way or another. Either that we can add experience or that we see that this technology, because we're usually looking at adjacent businesses, not B2C specifically, but we see that it can add value for our core business, if you put it that way.
Well, I would think that, this is not a big room, although we're delighted to see that we have standing room only. So I guess they underestimated the draw here. But I would imagine most of the people in the room are focused on getting money or deploying money. So I'd like to tease out some of these points that we were just making before and what was shown on the screen. And let's start with you, Peter. B2B versus B2C, US versus Europe versus the rest of the world. What's more interesting right now to you and your investors amongst those, and maybe a little bit of why?
Yeah, I think that firstly, like Stefan made a great point, that the acquisitions that we're seeing now are definitely focused more on strategic growth and proprietary technology. And I think that that's one of the reasons why you saw the Fanatics and DraftKings bid for PointsBet. I'm sure a lot of that, a large contributing factor to that was Bannock, because as you said, you can just otherwise wait for the company to die and then pick up the customer base. I also think that we're seeing, I think that all operators are focused more on profitability now than they were before. So anything that increases your margins or your profitability is a lot more, I guess, in focus at the moment. And you're seeing that with a focus on iGaming content, with a focus on pricing and trading tools as well. Like there's the rumored deal between Angstrom and Entain. And I think that is a play on the growth of same-game parlays in the US. In terms of B2B versus B2C, I think it's probably more of a split between Europe and the US. And the European businesses are generally taking their already profitable business to the US and applying the painful lessons that they've learnt in Europe to a new market. And they're able to use the cash flows from their European business to fund that, rather than having to go to the market and pay exorbitant, costs of capital. So I think we've seen that in B2C, we've seen that with the likes of Flutter, that are able to use their global business to fund a US business, compared with, DraftKings and MGM, which they still lost $200 million in the first quarter. So they're nowhere near to being over the hump. So I think it's, from my perspective, it's probably more of an international versus US than a B2B versus B2C. But we've always preferred investing in B2B anyway, because it's a higher quality revenue model. You're taking a clip from many clients, and typically with a baseline fee anyway. I guess the biggest issue with B2C is your varied customer acquisition cost and your uncertain player retention, particularly if you have tens of up to 100 operators in a market. Like in Australia, you have 130 operators, so there's not exactly a ton of loyalty.
Well, let's just to dig in on that, and maybe we'll ask Jonathan to follow up on this point. But you say that B2B is more interesting than B2C because it's a higher quality customer base. I guess there's fewer competitors, right? There's also fewer customers.
Fewer investors as well.
Yes. Yeah. If you You know, when you look at least in the US, like you look at GAN and Bragg and some of these other companies that are trading really, really cheaply right now, and you kind of scratch your head and say, why? I mean, they have nice products. Why is it doing so poorly? And then when you think that it takes so long for a B2B to bring on a new customer, right? A lot of them, when I speak to them, they get into the queue, and until it goes through that whole transformational process of becoming active, there's an awful lot of investment and time and programming and teams. And once your customers get big enough where they're really meaningful to you, they start saying to them, those customers say to themselves, why don't I just do this myself instead of paying somebody else for it? So it seems to me that if the world is consolidating, if these businesses are all consolidating around bigger things, where is the opportunity generally for B2B when, long term you're going to lose your customers and there's fewer and fewer of these companies available to provide your services to?
Yeah, look, I think we will see a lot of consolidation. I look back at your charts that you put up, and on the B2B side, it's all about exposure into different sectors. So if you're an aristocrat and you've got cash on the balance sheet, it makes sense to go and buy Neo games. You're likely to have supply chain issues for boxes, replacement cycle pressure in the US, all the component parts being built in Asia, challenges putting that together, so you need to diversify your reach into other sectors. The iGaming, iCasino legislation is too slow in the US as it is, so everybody's looking at these pre-regulated market exposures. So I think the balance, if you're a listed business, you've got shareholder pressure on the revenues, and the mix of where you're taking revenues from is really, really important. And if you're an MGM Leo Vegas, you're likely, you've got licenses to consider, and you're going to shut down Japan-facing initiatives and that type of thing. But if you're a Betson and you've got fast growth initiatives, big presence in Latin America, that makes sense, right? So it's sort of horses for courses. But we invest in gaming technology, the same as Peter, and leverage omni-channel operating experience into ventures. So I think we see an opportunity along the sort of tech stack where there's not one B2B supplier, whether it's a Playtech, a Neo, Aristocrat, who fulfills every need of the operator. And it's investing in those incremental solutions that resolve operator pain points that will come good.
So your point, if I'm getting it correctly, you're saying that the opportunity in B2B is to be a niche operator who brings a particularly unique technology to the space.
I think so.
And ultimately, the exit will be that will be adopted by the larger ones by buying that company in.
So I think the natural exit in this market is that the bigger strategics take out those growth companies. Mm-hmm. But initially, those growth companies will probably be facing into fast growth emerging markets and scaling there. I see the Americas per se as the growth engine for the next decade. And I think with the slow pace of change and the regulatory hurdles to get into the US, most companies are likely going to see the growth in South America and then sell to a bigger US facing organization.
So if I had to pick one topic that over the past 9 months or so that I've heard the most about, where people are interested in, it's Latin America. Everybody is interested in Latin America. They say this is the next big opportunity. can you tell us a little bit about what it's, do you guys operate in Latin America, or you're heading to Latin America, or you're not interested in Latin? Tell us what's your perspective on new markets, and particularly Latin America.
Sure. Yeah, we're dipping our toes in Latin America, if we put it that way. Yeah, I agree. I agree. Apart from the US, Latin America is probably the most exciting region globally right now, also because it is going towards regulation that looks to be a decent regulation for an operator. Taxes are decent in several of the markets that are discussing it. And of course, it's a large population, it's mobile-driven, and it's growing, right? Without maybe all the complexity that you find in some of the European markets that are ex-growth and becoming more and more complex. So on the other hand, there's still a lot of uncertainty how these markets will evolve.
How long have we been waiting for Brazil to regulate gaming, right?
Right, we're still sitting there and trying to understand all the different things going on there. And you know, there are a few early movers that have done really well. I'm impressed by some of these kind of local champions that have, I would say, maybe not the best product, but they've been able to create strong brands in a short period of time and are doing insanely well.
Now, is this just in the regulated markets, or because there's an awful lot of gray
I would say
operations.
gray. I mean, I would say that most of the markets, primarily Brazil, is still pre-regulation, right? We still don't know if casino will be regulated or if it's at the same time. I think that also has given an opportunity for some early movers. On the other hand, if and when Brazil gets fully regulated, you're going to see a lot more activity from us and other operators. So it's going to be a more crowded market, where I do think that you need a better product as well, and you need to invest a lot. So, but meanwhile, in this kind of gray territory, it's possible to grow a lot and generate a lot of cash flow.
Yeah.
So congrats. We're not really there as much as we would want. I think we're a bit cautious given the uncertainty.
Well, especially because you're part of MGM, makes it a little bit harder now. It gives you a little less flexibility in that regard, right?
I think we're a bit more cautious or prudent, if you may. But on the other hand, when we do choose to invest, we'll invest big, and I think we'll come in with a very strong product.
Right. And Peter, have you been investing in companies that are focused on Latin America? Have you been seeing much, or is it mostly because there's plenty of B2B operators down there also, right?
We're still very much focusing on North America.
North America.
And fully regulated markets.
So you don't get involved in gray markets at all?
No. And I guess we also focus mainly on B2B, and I think a lot of the B2B businesses that we look at probably aren't looking to take their business to Latin America yet. Still looking early. But everyone's been talking about it for a while.
Now, Jonathan, your fund and involvements are earlier stage, and so do you have that same prohibition, or you're more open-minded in saying you're willing to go into pre-licensed jurisdiction, to invest in companies that are working in the pre-licensed areas?
I think we're highly regulated. I've always been personally licensed on the operator side in Michigan, Pennsylvania, various white and white jurisdictions, and I think that's a value and a barrier to entry for a number of businesses that can't enter because of their exposure to Asian revenues or agency betting markets, which would make it challenging. But that said, again, investing in B2B, if a CRM platform per se is supplying B2B or B2C operators who have exposure to pre-regulated markets, that might be a bit of a blurred line. And I think the whole regulated mix is actually quite blurred now. If you go back 10 years ago, it was really, really cutthroat. You know, if you wanted a Nevada license,
right,
you didn't touch anything remotely gray. But those lines have blurred. It's not the same.
Bally's, which is licensed in 14 states in the U.S., and now has just recently gotten licensed in Illinois, owns GameSys.
Yep.
And that's half of their EBITDA. That's $300 million of EBITDA, of cash flow coming out of GameSys. GameSys gets a third of their EBITDA coming out of Japan.
Correct.
And someone, I don't know if it was you this morning or someone had said to me earlier today, that's not a gray market, that's almost black. Although somebody else said there are 50 shades of gray for, and this was dark gray. What is your reaction? You know, and I know when MGM bought you guys, and I think you mentioned that you're 85% white markets now, and going towards 100%, that Bill Hornbuckle, the CEO, made a comment about, oh, we're going to be focused exclusively on that. So how does that reconcile the concerns? Because I always thought the same thing, that if you were in gray, you wouldn't be able to get a license in the US, but clearly Bally's has been able to do it in 14 states. So what's kind of the story? What are you seeing there?
I don't know the Nevada Gaming Commission, so I couldn't answer. But we're obviously not in Japan. MGM is, on the other hand, building a huge integrated resort there. So there's other opportunities in Japan, but I honestly don't know. I would also really much like to understand how the
I think you have to have a point of view.
From my understanding, you know, just from data points that you pick up along in conversations, is as long as you're not breaking the law within that jurisdiction, they don't really care. And that's so different to, and that's not specifically Nevada, but I mean a US state.
Right.
If your business has got exposure to Turkey, then it doesn't have the same red flags as it did 5-10 years ago, which is, I honestly think the lines have blurred so much. I mean, even some of the acquisitions that we've seen, Bally's is a good example. Amazing thesis, great potential, and taking the benefits of exposure to fast growth markets and investing in omni-channel propositions in the US. I mean, they've essentially got the best of both worlds, just a huge execution risk.
You know, I find it interesting, listening to the three of you, focused primarily, I only want to be licensed, I want to be licensed, but you just pointed out there's gray, and you know, there's this blurring line, and we've seen the US regulators, who seem to always be the most strict, seeming to get more and more comfortable. And I think when they went into Macau originally, and you had these junket operators, which were clearly operating in ways that the US regulators would have considered completely illegal. Now, eventually the money kind of said, hey, we got to do this, we can't miss out on this. And I think maybe we're seeing more of that same thing here, and saying, well, it's okay to be a pre-licensed market, but it's not okay to be black. So the challenge is to find, where is that dividing line where the gray gets just too dark.
Some good legal fees.
Yeah.
Going out there.
We only have a couple of minutes left before we continue. Is there any questions for anybody on the panel that you'd like to ask from the audience? Typical audience, no one wants to speak up. Okay, so let's keep going. We talked about Latin America. What about Asia? What happened to Asia? Everyone was focused on Asia for so long, and no one's talking about Asia anymore. What are the thoughts on that? You wanna?
I would assume there are a lot of Asian-focused people in this conference, but it's a difficult region, regulatory-wise.
So, look, I spent 8 years in Asia, got family ties to the region, and I was out there a few weeks ago, and it's quite interesting. I was expecting a lot more European interest, a lot more sort of progress, and I think it's been relatively dominated by the big betting giants out there. You're not going to infiltrate that, with the exception of markets like Japan, South Korea, India, where the European operators and suppliers will probably have a little bit more cut through. And where I was expecting more innovation was actually on the sort of state lottery side, and that hasn't really progressed. I was expecting, you know, the Hong Kong Jockey Club are doing good things with customer experience, mobile apps, but that's really the extent of it. So the status quo is sufficient for those guys. They don't see a need to invest in other parts of the world when their exposure to 60, 70 billion a month in GGR. So I think they're making their money and quietly getting on with it.
Got it. We have so many more questions to go through, and we have no more time according to the clock, so we're going to have to wrap it up here. But I'm sure all of our panelists would love to have a conversation with you, and we happen to have a booth at Spectrum Gaming Capital out here, so if you want to chat with me, please stop by. But thank you all for coming, and thanks to the panel for a great job.
Thanks so much.
Good afternoon.